Welcome back to the channel. In today's video, we're going to be going over a trade that we took live with the private Discord. It's Twitch. So if you were on Twitch, this is going to be the reasoning on why I took that trade. Five puts took some went over 100% on the 0 dates and over 50% on the next days out. So let's talk about why I decided to short a SPY and make it's still going, so it might make us more money. So let's first start off where we should always start, which is the daily time frame, right? Let's go over the daily time frame. So let me first talk about what has happened the day prior. The day prior was very gap down, long, and actually had a long position that closed near the tops today actually on both the SPY and QQQ. In this case, I traded on forex. SP 100. It was fees and overnight swing shit that you gotta pay with that. Profited around $7,000, something around those. Anyway, let's talk about what was my mindset going today. Big green day, gap up today. Usually, if you gap up, you want to look for caution after a big day. Very similarly, how you gap down after a big red day, you might want to look for a potential bounce. Right now, it's not sometimes kind of rule of thumb that I like to talk about. So on the daily, I like to draw my fair value gap here that we had around this 437.61 fair value gap. If you're not familiar with those, I have to make a video on those. I don't think I have a video on the fair value gaps. Anyway, but in the fair value gaps, the way I like to try. So where's the halfway point on the fair value gap? You take it from here. You go to my Fibonacci tool here to here, right? So 438.53. So then I will draw my level for 438.53. Keep that in mind. And this is kind of what I'm looking at on the day. And to know from from the prior weeks. In this case, there's not really nothing to have some here and resistance. See here that turned into support. So there was something to know. Again, aligns with the gap. But it was not something I was too close to looking at like as a level. Then I like to zoom myself in. Look, what do we see in these 4 hours? Okay, with that fair value gap, that we adjust it and kind of clean it up. So make it maybe a little bigger. Move it to count to the halfway point, which is rough right here, and and kind of look for that end. Also, $0 in here, and you'll see how that's taking levels. Kind of. Then we zoom in on. Let's zoom in on the 15 minutes. On the 15 minutes, actually, nice run up here. That's where we. And then we had this pullback before the market opened, right? This is 15, and then big push up. So now when I was looking at into this, I was two things in mind. I was like, one, either this sells off more and I look for bounce. So when you want to look for bounce, you look after this nice little move up that you see here. You want to get a little bit of a bigger sell-off to get in a nice long position. And my target would have been this yellow line. So when I first started 51 level for potential bounce. And as you guys can see, that did not happen. So none of those long orders that were waiting here did not fill. So in my mind, I'm thinking, okay, well, we're probably going to push higher, but that much higher because we didn't come back to test some of those levels that I want to fill those long orders and then higher, right? So then I look for my next area, right? I have this orange line here. As you guys can tell, it has been a resistance level. It cannot chop on it, but reject, chop on it, and reject, and so on and so forth. So I'm looking at a level for potential rejection play. And I'm zooming in. Now on a 5 minute. Now I take my short position tool so you can see. So then I look for this move up, right? We retested. You can call it like a triple top for pre-market hours, whatever you. And realistically, you want your those 5 minute close. If the 5 minute close does not stop you out, doesn't close above the level you have, you don't stop out. As you guys can see, it did wick, but it never closed above it. So we stay in the. So that was the trade I was looking for. Entry roughly around here, right? Probably got a little. Our entry was probably a little lower by the time we filled right. Because the first sell off was wrong. And then looking for partials. My first 5 minute fair value gap here. Second partial should be around this close right here. And lastly, this yellow line here, which is close potential area. Also, I could bounce. You see, you're actually getting a tweezer tops into a bounce here. Come back to this and check it after I upload this. But I guess we're either bounce and then short or bounce into this area and then short. That's probably what I think it's going to go. I'm looking at it. What I'm looking at. But anyway, also another thing to know is I want to show you guys the QQ real quick. So you guys see spies kind of like when this first short that we hit our first target, hit our second pretty close to it, ended up filling us on the second around this level, and then kind of it went up here. All right, let's talk about why I didn't move my stop loss to break even. It's more of a risk management, like risk to reward type of deal that you find in your trades, like a lot of people set trailing stop loss or move it to break even. And again, that is fine. Trailing stop loss are not good in my opinion, unless you like really have to walk away. In my opinion, you should not really move your stop loss. You just gotta let your trade just play out, because the third party long term is gonna get hit at least 50% of the times, and it's gonna bring up your risk to reward more often than not. And if you do stop out for the loss on the last few, you should still be fine after you take two partials, because overall you still should be going to trade. So personally, I don't like to start my stops to break even. Now I do mention it. Sometimes it's mostly because sometimes I have to save people for themselves. I kind of know like, hey, do have risk management in case shit does go south. But it's just like a personal preference of mine. Anyway, where was I at? So yeah, so also a rule that I like to use is the 5-minute rule. Again, you guys can see here, a lot of people could be like, okay, I'm just going to close it, but quickly fill those orders, stop hunted, we like to call, and then, run it back all the way down. So, luckily for me, following those rules kept me from not closing position and hitting all my targets, and eventually hit the second target, and then I hit the second target already, but hit the third target, and it was a pretty big difference on how much money you make the second and third target. It also feels a little stress-free after you do take some profits, and it makes it a little bit easier to being able to handle those when it goes back up. So that was kind of like my whole mindset in it. I also want to point out the way that SPY was moving. So we're very familiar, I talked about this before, the bull flag, right? Your bull flag, you move like this, and then you go up. You can see SPY was not doing that, showing me that the buyers are not really that strong. So if I show you guys compared to the QQ, as you guys can see here, when the QQ had this move up, at the same time SPY was moving up, and just overall QQs, you see like this is back to the lows. QQ is not even near it, while SPY is near it. You can see the difference of the strength today that Q's had versus the SPY. And also the QQs had this big move up, but it was near resistance ahead. I mentioned it to chat 360 to 50, which is why I was still okay holding it unless SPY had a big move up to the upside and hit my stop loss. I was still fine holding as long as we were holding at our level. QQs actually ended up hitting 360 to 50, could have been a short position. I don't know if anybody took it. I didn't personally, but it was something I mentioned, and then sold off. Now actually this long looked pretty good here off this fair value gap. Premium fair value gap down here for a bounce on the Qs. So but look at this high bull flag, move up. If SPY was doing this bull flag and move up, I would have felt much less confident. And it is something I mentioned on the stream, looking for that exhaust. Like when you do this, sellers usually are not, or buyers or sellers are not exhausted, but when you start doing this, they kind of get to. And then opposite goes for if you're doing a bear flag, be like this, right? This is the bear flag. But then if you start doing this, you tend to go up. And again, if you trade any type of wedge patterns, tend to look very similar. So all this is why I ended up going with SPY puts. If you trade live with me if you want to trade with me live every single day, I'll leave the links down below. We're doing a deal, $5 for your first week. So if you want to join for only $5 for your first week, I promise you guys, be much more well spent than your Starbucks coffee or whatever. And as always, leave a like, comment, subscribe, and peace.